Welcome to the deep dive. Today, we're taking a closer look at Rainbow Children's Medicare Limited, really aiming to get a handle on their recent financial health and, strategic moves based on their latest Q4 FY24-25 earnings info.
Exactly. We've got quite a bit to work with here. Their presentation deck for analysts, the official press release, and the key decisions from their board meeting, all dated May 24th, 2025.
And for you listening, our goal is to sift through all this, pull out the really crucial insights, what's actually driving Rainbow's performance, where are they heading, and maybe what does this tell us about the bigger picture in pediatric and perinatal care.
Sound good.
Okay, let's jump right in. Those headline financial numbers for Q4 FY25, the last quarter of their fiscal year.
Right. So for Q4 FY25, Rainbow's total revenue came in at $701.1 million. Now, what's immediately noticeable is that while it's up 8.5% compared to the same quarter last year,
Which is positive growth.
yes, definitely positive year on year, but it's actually down 7.0% from the previous quarter, Q3 FY25, which is at $980.8 million.
Okay, so year-on-year growth is good, but a bit of a cool down from the immediately preceding quarter. How did that flow through to profitability, EBITDA?
Yeah, looking at EBITDA, that's earnings before interest, taxes, depreciation, and amortization, a key profitability metric. It landed at $1,147.3 million.
Okay.
Again, similar story. That's up 8.7% year on year, which is good, but it's a more significant drop of 14.6% from Q3's $1,343.6 million.
And the margin?
Their EBITDA margin was 31.0%. So that's actually up very slightly, just 6 basis points compared to last year, but down quite a bit, 275 basis points compared to Q3.
Okay, so profitability held up slightly better than last year on a margin basis, but definitely a pullback from the strength in Q3. And the bottom line, the net profit.
Profit after tax PT was $565.5 million. Here again, decent growth, 10.7% compared to Q4 last year.
Yeah.
But an 18.0% decrease from Q3's year of $689.4 million.
And the PI margin.
The PD margin came in at 15.3%. So that's up 31 basis points year on year, but down 204 basis points quarter on quarter.
It really seems like that pattern is consistent across the board, doesn't it? Good year on year, but a clear sequential decline from Q3. What about the full year? Did they give context there?
They did, and the full year picture, FY24-25, looks much stronger overall. Total revenue was $1,558.7 million. That's solid 16.9% growth compared to the previous fiscal year.
That's pretty significant growth for the full year.
Absolutely. Full year EBITDA hit $898.9 million, up 14.2%, giving a full year margin of 32.3%. And the full year paid was $442.3 million, which is up 11.9%, for a paid margin of 16.1%. So yeah, the annual performance looks quite robust.
Definitely paints a stronger picture over the longer term. Now, going back to that Q4 dip compared to Q3, did they explain why that might have happened?
Yes, the chairman actually mentioned it specifically. He noted that Q4 tends to be seasonally a bit muted for them compared to Q2 and especially Q3.
Ah, seasonality. Okay.
Yeah, so that context is pretty important when you look at those quarter-on-quarter drops.
That makes sense. Healthcare definitely has those seasonal flows. Okay, let's shift gears to their operations in Q4, capacity, bed usage, that sort of thing.
Right. So their total installed capacity, the number of beds they could potentially operate, stayed flat at 1,935 beds. No change year on year or quarter on quarter.
Okay.
But the operational beds, the ones actually staffed and ready, increased by 7% compared to last year, reaching 1,523. That number was flat compared to Q3, though. This suggests they've integrated some newly commissioned beds into the active network over the year.
So more beds available compared to a year ago. How full were those beds?
Occupancy. Well, interestingly, occupancy actually dipped. It was 46.5% in Q4 FY25. That's down from 48.5% in Q4 of the prior year, and a more noticeable drop from 53.2% in Q3 FY25.
That lower occupancy definitely ties into the lower sequential revenue we just talked about. What about patient volumes, actual people treated?
It's a bit mixed. Inpatient discharges were down 4% year on year to 22,975, and they saw a bigger drop, 10% compared to Q3. But on the other hand, outpatient consultations in clinic visits actually showed a little growth, up 3% year on year to 3,056,901, and even up 1% from Q3.
So outpatient held up better.
Yes. And deliveries, a key service for them, were up 6% year on year to 4,221, but they were down 8% from Q3. So yeah, outpatient seems more resilient. Inpatient saw a bit of a dip.
Fewer inpatients, maybe. So how did that impact the revenue they generated per bed or per patient?
Now that's an interesting one. The ARPOB average revenue per operating bed actually showed a pretty strong positive trend. It went up 7% year on year to 58,057,
Oh, okay.
and it was also up 9% compared to Q3.
Wow, so even with lower occupancy and fewer inpatients, the revenue per occupied bed increased significantly. What does that suggest?
Well, it could mean a few things. Maybe they're handling more complex cases, higher acuity patients, which naturally command higher revenue, or perhaps there were some pricing adjustments. It's definitely a key metric suggesting they're generating more value from the beds they do fill.
That's a really important counterpoint to the occupancy dip. Focus on value over just volume, perhaps? What about length of stay? How long are patients staying?
That continued to trend down. The ALOS average length of stay was 2.77 days in Q4. That's shorter than the 2.84 days last year and the 2.91 days in Q3.
Shorter stays usually point towards better efficiency, right?
Generally, yes. It can indicate more efficient care pathways or managing less complex cases on average, though combined with the rising ARPOB, the efficiency angle seems more likely.
Okay, that gives us a good sense of the operational side for the quarter. Let's pivot now to strategy. What were the big strategic developments they highlighted?
A couple of really significant things. First, a major clinical milestone.
Mm.
They performed their very first liver transplant at their Chennai hub. That's a big deal.
Wow, yeah. Complex procedure.
Very. And building on that, they also secured the official license to perform liver transplants at their Bengaluru hub, too. So you can really see a clear strategic push here. They want to boost their high-end tertiary and quaternary care services, the really specialized stuff in Chennai and Bengaluru.
Kind of bringing them up to the level of expertise they already have in Hyderabad.
Exactly. It's about replicating that center of excellence model in other major cities. It signals a real step up in their capabilities and how they compete.
That's a strong signal of their ambition, moving deeper into complex care and key markets. Any other strategic highlights?
Yes, another point on quality. Their fertility unit, the Rainbow IVF at Kondapur in Hyderabad, got its JCI reaccreditation.
JCI, that's the international quality standard, right?
That's the one, Joint Commission International. It's a pretty high bar. This makes it their third hospital with JCI accreditation, which, underlines their focus on international quality benchmarks. And importantly, they also confirm their overall network expansion plans are moving along as scheduled.
Good segue. Let's talk about that expansion. The reports gave some specifics on the projects underway.
They did. So as of late May 2025, the update was the Rajahmundry Hub Hospital, about 100 beds, is nearly finished. They expect it to open by the end of Q1 FY26, so pretty soon.
Okay.
Then in Bengaluru, they have 2 spoke hospitals, smaller units feeding the main hubs. One in Electronic City, around 90 beds, and one in Hennur, about 60 beds. Both are progressing well, expected to open by the end of Q2 FY26.
So 3 new facilities potentially opening in the first half of this fiscal year.
Seems like it. Plus, they've started project work on a bigger regional hub in Coimbatore that's planned for around 130 beds. And up in the NCR, in Gurugram, they've done the groundbreaking ceremonies for 2 sites, Sector 44 and Sector 56, and actual project work has begun there too.
Wow, that's quite a pipeline. Rajahmundry, Bengaluru, Coimbatore, Gurugram. They're certainly not sitting still on the expansion front. How are they funding all this? What's their financial position like?
It looks pretty comfortable, actually. As of March 31st this year, they had nearly $7 billion, specifically 6,989 million sitting in cash, equivalents, fixed deposits, and mutual funds.
That's a substantial war chest.
It is. And the report specifically mentioned that this will support their ongoing CapEx. They expect to fund all the planned spending from their own internal resources.
So no major need to borrow for these projects, it sounds like.
Apparently not.
Yeah.
Which is obviously a position of strength, gives them flexibility.
Did they mention how much they actually spent on CapEx in Q4 itself?
Yes, they invested $437 million in capital expenditure just in Q4. This was focused on both expanding capacity and upgrading facilities and equipment at their existing hospitals. So investing in both growth and keeping current assets up to scratch.
Makes sense. Okay, let's talk shareholder returns. Dividends. The board made a recommendation.
Yes, they did. The board recommended a final dividend of €3 per equity share. Since the face value is 10, that's a 30% dividend payout. The total amount for this dividend would be around $304.7 million. But importantly, this is just a recommendation for now.
Right, it needs shareholder approval.
Exactly. That approval will be sought at the annual general meeting, which is scheduled for Saturday, July 5th 2025. It's going to be held virtually.
And assuming shareholders give the green light, when would the dividend actually be paid?
The record date, the cutoff date to be eligible, is set for June 28th, 2025. If approved, the dividend should be paid out within 30 days after the AGM concludes in early July.
Got it. So dividend proposed, AGM upcoming. Were there other key decisions from that board meeting besides the financials and dividend?
Yeah, mostly governance-related items. We already mentioned they set the AGM date. They also approved appointing a new secretarial auditor, Mr. KVS Subramaniam, for a 5-year term starting this fiscal year, FY26. That's subject to AGM approval too, of course. He's got over 21 years of experience in corporate law, apparently. Also, Deloitte Touche Tohmatsu India LLP were reappointed as internal auditors for the next 2 years, FY26 and FY27. And Ms. Lavanya and Associates were reappointed as cost auditors for FY26. Just a side note, Lavanya and Associates are apparently converting into an LLP.
Okay, so sorting out the auditors, standard governance practice. Now, the reports also showed standalone financials, not just the consolidated ones we focused on. Why look at those? Any quick insights?
Well, standalone figures show the performance of just the main Rainbow Children's Medicare Limited company without consolidating its subsidiaries. It gives a slightly different view. For Q4, standalone revenue was about $3.5 billion, and PT was around $545 million. For the full year, standalone revenue was $14.5 billion, PT was $2.37 billion.
So slightly different numbers, as expected.
Yeah. The main thing is that the auditor, SR Batlaboy and Associates, gave what's called an unmodified opinion, basically a clean bill of health on both the standalone and the consolidated results. That adds confidence to the numbers.
Good to know. And they also broke down some operational stats by mature versus new hospitals, right? What's the value in seeing that split?
Yeah, they define mature as hospitals operational for over 5 years, and their Guindy Chennai unit just crossed that mark. By splitting the KPIs like occupancy or ARPOB between these mature hospitals and the newer ones, under 5 years, you can sort of see the growth curve.
How quickly the new ones ramp up.
Exactly. Mature hospitals usually have more stable performance, while the new ones are still building volume and efficiency. Seeing the difference helps you understand how long it takes for their investments to, well, mature and contribute fully. It gives insight into their investment cycle and future potential.
Makes sense. Okay, just a couple more quick points from the reports before we wrap up. They mentioned the payer mix.
Right. For Q4 consolidated, it is roughly 47% cash pay and 53% insurance and corporate payments. So a pretty even split in terms of how patients are paying.
And ESG.
They mentioned ESG, environmental, social governance, is a core principle for them, but didn't elaborate much in these specific documents.
Okay. And lastly, awards.
Yes, they highlighted getting the Great Place to Work certification again for the 5th time running, and they scored over 90%, which they seemed quite proud of. It points to strong focus on their employees and culture.
Yeah, being recognized consistently like that is definitely notable, especially in healthcare, where staff are so crucial. Okay, we've really unpacked a lot there. Financials, operations, strategy, expansion, governance. Based on all that, what are the main things that stand out to you about Rainbow right now?
Well, I think the key takeaways are, first, continued pretty solid revenue growth, especially looking at the full year. Second, a very clear strategic push into new geographies, and importantly, into higher-end complex care like transplants in major hubs like Chennai and Bengaluru.
Right. That ambition is clear.
Third, they seem to be in a very strong financial position, able to fund their significant expansion plans internally. That's a big plus. Fourth, while Q4 showed that seasonal softness compared to Q3, the year-on-year performance is still positive across most metrics.
And the quality and people focus.
Yes, definitely. The JCI accreditations point to a commitment to quality standards, and that Great Place to Work award highlights their focus on their workforce. So overall, it feels like a company that's growing steadily, expanding strategically, financially sound, and paying attention to quality and culture.
A picture of, let's say, managed growth and strategic deepening. Okay, so for you, our listener, wrapping this up, here's something to maybe chew on. Consider Rainbow's quite specific focus, that integration of pediatrics and perinatal care. Combine that with their hub-and-spoke model and how they seem to engage doctors. How does all that position them uniquely in India's really fast-evolving healthcare scene?
Interesting angle.
As they push into new regions like the NCR and deepen these high-end quaternary services, what opportunities might this integrated approach unlock for them? And conversely, what challenges might it bring up? Definitely something to think about as you digest this deep dive into Rainbow Children's Medicare. Thanks for joining us.